I hear those Hinman emails are going public this week. XRP Army, I know you're excited. The rest of the market is still reeling from the SEC's behavior in recent days. When we run the numbers from the weekend, the long-term outlook, we're still sitting in a pretty downwards trend. However, year-to-date numbers show us that 2023 is giving us some pretty decent returns. Short-term outlook, Bitcoin opened above 25,000, which is not much of a difference from what we've seen in the last couple of days. It's the alts that are taking the brunt of all of the volatility right now. The SEC's crackdown has the market uncertain, and with the Fed's interest rate decision also upon us, we can expect a lot of volatility right now. My opinion, the summer is probably going to be pretty quiet until the United States decides what they want to do with digital assets. Fortunately, the digital asset markets infrastructure bill has resurfaced. You're watching DHN. Let's talk crypto. So are we under attack? This is what the crypto space is wondering after the recent actions from the SEC against Coinbase and Binance. 48 hours after the suit was announced, Binance US lost 80% of its market depth. That's crazy. However, I tend to agree with what JP Morgan just told CoinDesk. They stated, the moves are creating more urgency for U.S. lawmakers to come up with a comprehensive regulatory framework by this year. Until this happens, crypto activity will likely continue to move outside of the U.S. and into decentralized entities. Crypto venture capital funding will also likely remain subdued. So, the SEC now has 3 of the biggest players in the space under their scope. This is, of course, going to bring a whole lot of attention to the U.S. crypto market. The thing is, though, if activity continues to go outside of the U.S., it makes you ask the question, where are they going? The BRICS coalition nations are very forward-thinking when it comes to digital assets, ladies and gentlemen. I don't think the United States is going to go into the election season without this being addressed. With that, when you look beneath all of the drama going on right now, I think we're being set up for the biggest catalyst we've seen in a very long time. Speaking of catalysts, those Hinman emails are set to go public this week, and I would expect a lot of price activity from XRP, especially if we get a smoking gun to come out of the information. Now, in all of this talk of securities, don't you love how Stellar Lumens and XDC has just not been mentioned? Now, I was doing some digging and I stumbled upon a tweet about this particular topic. Stellar Lumens, they state that the reason why Jed McCaleb and Stellar have not been bothered is because of their geopolitical positioning. The deal between them and the Ukraine, USDC Circle, MoneyGram, it puts them in a very prominent position. In my opinion, it gives them leverage. And in the case of XDC, well, we're strictly talking about software here. So Polkadot proved to us that when you make the switch from digital asset to software, it gives you a lot more clearance when dealing with the SEC. So I'm curious to see how everything is going to turn out. We will be focusing on this topic this week. As a matter of fact, the video for Wednesday, we're going to dive into that PDF from the tokenizer that I told you guys about in the Elite 8 video. In other news, Algorand, Flow, Cardano, Solana, and Matic all reached new lows as a result of the SEC crackdown. Man, if you've been holding Algorand, I feel for you, all right? I really do. In the case of Flow, though, you don't always see this, and I think this is a very, very nice buy opportunity. Flow is Dapper Labs blockchain. They essentially ushered in the NFT sports renaissance that was real popular in 2021. If you're looking for a strong NFT play, might be time to get into the Flow. Now, for Solana, Cardano, and Matic, they have already come out and stated their case against the SEC. What I think is going to happen here is that once we do even get a hint of clarity, these will be the first assets that will fly once that information hits us. So be on the lookout for that. Now, this brings us to a new segment. Every week, we're going to pick 3 cryptos that we need to keep an eye on. And we're going to do it in less than 60 seconds. Number 1 asset you should look out for, Decentraland. You want to know why Decentraland has not made any noise since last summer? It's because they've gone off to work on 2 very important things. 1, an upgraded desktop client, which will allow for access not just from your computer, but your mobile phone as well. In addition to that, they have been working on the virtual reality headsets for Decentraland. The next coin you need to be looking out for is Render. You're going to need someone to generate the graphics for these metaverses. Render already has working relationships with Apple and Meta. And in number 3, Sensorium Galaxy. One of the biggest takeaways from that presentation that Apple had a couple days ago is the name of the game is Immersive Environments. Sensorium has about 6 of them that they just updated their tokenomics. Ladies and gentlemen, Sensorium is now a payment coin. Yes, Sensorium, the token, will be used as a payment method for the metaverse and any other metaverse that would integrate with Sensorium. We've called the Metaverse Rally on this channel here before, and ladies and gentlemen, I truly think we're at that time again. So I'm going to leave you with a couple ideas to think about. The Wall Street Journal just released a spicy interview with Coinbase's CEO, Brian Armstrong. Unfortunately, I can't play the video for you here because DHN is not WSJ. Not yet anyway. But the entire crypto space is freaking out because of what Brian just told us. In essence, Coinbase has done everything in their power to be on the good side of the SEC, yet the SEC continues to move the goalposts. My question is, why continue with all the rigmarole? And what would really happen if the SEC does get their way and the entire market is deemed securities? Well, I stumbled upon a clip this morning that's going to give us a bit of an idea of what to expect. Take a listen.
So why does it matter? Well, this question is of great significance. If the SEC classifies digital assets securities, it's going to be very costly for digital assets to continue to exist. So under the Securities Act of 1933, there's a requirement that anyone who is selling securities must either 1, register with the SEC, or 2, sell pursuant to an exemption. So registration with the SEC looks generally like an IPO. This is a very expensive process where you're going to have to give tons of documents to the SEC and therefore to the public. And these documents are going to describe the business, discuss the balance sheet, what the business is planning on doing in the future, and the like. It's a very expensive process. It's going to involve investment bankers. It's going to involve lawyers and lots of transaction fees. So it could be very, very expensive, like I said. That's a big downside for digital asset creators that are trying to bootstrap projects into existence and want to access public markets for liquidity. Second, you have the option of selling subject to private placement exemption. Under Regulation D, Rule 506 allows you to sell equity in a private company subject to this exemption, meaning you don't have to do an IPO, you don't have to register your securities with the SEC. What that looks like, though, is you're generally only going to be able to sell to accredited investors, and you're generally not going to be able to solicit investments. That means you can't market. You can't be like, hey, come invest in Dolphin token. You know, that's a no-go. You're going to lose your exemption. You have to register. It's going to be a very costly process. If you violate this as an issuer, then you're going to be subject to a right of rescission. So purchasers can say, hey, I want my money back. Or they could sue you, and issuers could be liable for monetary damages.
So according to that, the biggest thing that would change would be how cryptos enter the market, meaning it'd be a lot harder for these scammy projects to get as much recognition as they do. This would add validity to the market. Validity will bring in more value. More value is more money in our pockets. He also touched on access, and when it comes to access, I have an interesting question about that as well. The thing is, as it stands, you have to be an accredited investor, and if some of these cryptos were deemed securities, then they would have to fall under one of those classifications. So we could be looking at projects like Quant only being accessible to accredited investors. But see, here's the thing with blockchain. Once you buy an asset and then you remove it from the exchange, which is why we're always telling you to get your crypto off exchanges, once you move it to a self-custody wallet cold storage solution, you then own an address on that blockchain. That blockchain is an immutable record, and an immutable record can't be changed. So my question is, if you've been holding a particular asset for more than 6 months, does that not make you an accredited investor? Again, I believe that we are setting up for the biggest crypto catalyst we have ever seen. And when you look at all of the details, everything is pointing towards utility-driven assets. But that's just my opinion though, guys. Let me know your thoughts down in the comments. If you found value in today's episode, of course you know what to do. Hit that like, subscribe, ring the notification bell so that way you don't miss the next one. As always, my name is Wade Teamer. I want you to have a great day, have a prosperous day, and most importantly, if that money is digital, So is the hustle. I'll see y'all in the next episode.